When you look at what happened with GameStop and now possibly touching silver, could anything like this ever happen for a currency?
I would say it's pretty impossible, certainly in the big currency pairs like euro dollar. I mean, we've got to look at the daily turnover for the foreign exchange market. I think it is now around about 6.6 trillion every single day. Now, of course, a lot of that is in the big dollar crosses. It's euro dollar, and then to a lesser extent, dollar yen and cable. And I think it's very unlikely you could get retail investors really making themselves known in a currency pair like that. Now, whether or not that's the same case in some of the smaller emerging markets, or perhaps even the New Zealand dollar or the Noki, well, it's unlikely, but perhaps a little bit more probable. But the daily turnover of FX is so big that this would be a completely different market for the retail investor.
It kind of harkens back to when George Soros broke the Bank of England many, many decades ago. Jane, I mean, is there any way of actually tracking some of the movements? Does everybody, including head of FX strategy, need to now track what's happening with retail investors?
I think it's really interesting. Now, I think we've got to sort of put this in the perspective as to why perhaps this is more interesting like now, this year, this month, than it was previously. And I think there's a couple of things here. And first is, the huge savings ratio that we've seen in developed countries because of the coronavirus, because of, payments, because people can't go out and spend money. We've seen the saving ratio is really quite strong. We've seen a lot of people perhaps furloughed or underemployed as well. So people have time on their hands. And now, of course, we have access to technology for the retail investor that just wasn't there 20 years ago, and that's just continued to improve really since the global financial crisis. So there's a number of reasons why we're seeing this now. Now, whether or not we're going to see the same sort of trends perhaps in a year's time when people are off furlough, when the savings ratios are down, when people can spend their money in more normal sort of means, it remains to be seen. But I do think from here on in, perhaps the retail investor is going to be more of a force to be reckoned with than perhaps it was before. I think what we've seen is an acceleration of a trend that was already building.